Brilliant. Hello, guys. Welcome to today's Solid as a Stock session. Just to check that everything is working tech-wise. If you guys can put on the chat if you can hear me and see my screen okay. I know last time we had a tech issue, so hopefully this is all working nice and smoothly today. So if you can just let me know in the chat that everything's good. Also as well, brilliant, sound good, thank you, Jose. As well, if you guys are new, if this is the first time you've seen one of our sessions, whether it's mine or just Tradictive or Trade with UFOs in general, let me know. If you're a veteran and you've been around ages and you're just sort of dropping in, catching up, also let me know as well. Hi there, Marie. So yeah, let me know where you guys are at. It's always interesting to see that. So hopefully the clue is in the name, solid as a stock. We're going to be looking at stocks today. Before we do so, the first thing I need to make sure that we do is just cover the disclaimers. So hopefully, there you go. That should be highlighting there on the screen. So for you guys to read. It is important that you guys read it, not just for legal reasons. I think it's good in terms of understanding the expectations. That, of course, I can show you different things that we do and how we use the technology, but ultimately, it's up to you guys to place a trade. It's up to you to decide how you do things, when you do things, how much money you use, whether it's a demo account, live account, whatever. So the disclaimers are important there. I've just seen there, Grain of Salt Trading Cubicle. Nice name. Jolly good. Brilliant. Cool. So we will be looking at stocks. So the first thing for me that I think is good to look at is the news that might affect us. And then we'll look at the overall markets. Just want to highlight a couple of things first. My email address, I know it's on its side there. It's just on that side if you turn your head, is becky@traddictiv.com. So anything I cover on the session, if you have any questions, just email me, becky@traddictiv.com. Or you've got this tradewithufos.com/Becky, which is that link that you see, that big link there on the screen. That one's probably better to ask me questions. And the only reason for that is because if I bring that up here, is that if you ask questions through here, if you go to that link, tradewithufos.com/Becky, you come down here. Once you've got a free membership, you can ask questions in a public forum, which means other people can see the answers and other people can see the questions. So it means rather than email me and potentially wait a little while for a response, depending on whether it goes to my junk or whatever, you can put a question here that other people might be able to answer, or I can answer, or it might be that the question you have somebody else has already asked. So it's a good place to come to sort of get your general questions answered and also help other people out by asking questions that they might have. So all you've got to do is sign up for a free membership to be able to ask a question. You literally just put in your name and email address and then just follow through the steps. As part of the free membership as well, you'll get recordings of the YouTube sessions that we do, the occasional discounts and promotions as well. Also on this page, and this is true of any of the coaches that we have at Trade with UFOs, you can book one-on-one coaching with us. So the one that says tradewithufos.com/Becky, you can use this to just come and click meet with me. What's happening there with my arrow? Come and click meet with me and you can book one-on-one session with me. Let's say you were watching Andrew, then it would be tradewithufos.com/Andrew and you would be able to book one-on-one coaching with him. So whoever you use, it's the same kind of structure, but you can do that on that page as well. Okay, so we're going to move on now and look at the upcoming news that we have. So I just use the fxstreet.com/economic-calendar. Of course, there are different places that people get news from. I'm not particularly bothered about the content of the news. I just want to know if there's going to be volatility coming into the markets, because that might give me a little bit more, might be a little bit more risk averse or a little bit more risk aggressive, if that's the opposite of that, depending on whether or not we're going to have high volatility. So on the fxstreet.com economic calendar, I filter by high impact news and I tend to filter by US markets. I'll also normally do it on a weekly basis because normally the stock sessions that we do, it's more longer term, maybe swing trading, position trading, or perhaps even investing really long term. And so knowing what's coming up for the week rather than just the day is normally more helpful. So we can see for this week, we had high impact news only on Wednesday, nothing else around then. Obviously, as we get closer to Christmas, I would imagine there's less going on in the world in terms of scheduled reporting. So maybe less to worry about in terms of that. But let's say, for example, if today was Wednesday and we could see that we had a whole bunch of high impact news coming out that day, it might be that I choose to use a little bit less risk, or maybe diversify a little bit more in terms of the different types of products I might look at. So rather than just stocks, it might be ETFs on different products, or maybe even completely different products anyway, maybe futures or options, something like that. Okay, so now that we've looked at that, we have an understanding that today we don't have to worry so much about volatility. We can have a look at next week and see as well if there's anything coming up. Tuesday and Thursday, something to be aware of, but otherwise pretty clear. Now, the next thing I like to look at is, if we go to TradeStation here, is the general markets. So general markets meaning the S&P as a whole. Of course, this is the ES that we're looking at right here, which is the futures contract that represents the S&P. And that's the top 500 US stocks. Again, maybe you might be trading stocks that are in the UK or in Europe or in Japan or whatever. Then again, just look at the index of that country's top stocks, because it will give you a general idea as to where you expect markets to go. Of course, individual stocks can move away from what the average does and move away from what the indexes do. But let's say, for example, the index as a whole is moving up and you have a stock that's looking like it's moving down. It's less likely to continue to go down and more likely to come up with the rest of the index. That's not to say it couldn't go down. It's just to say that you're kind of losing probability there. If the whole index is moving up and the individual stock you're looking at is moving up, that kind of goes well together. It gives you that extra layer of probability. So that's why we look at this first. So on this chart over here, this is a daily chart of the ES. All I care about with this is what this last auto climate dot is showing me. So that's a thick blue dot, confirmed probability there to the upside on the ES. Now, this is true, I believe, on a weekly chart as well. So let's check this out on here. What's GDX? So if we change this to the ES as well, that should sync over. I believe it's true on a weekly chart as well. Yeah, so we have probability to the upside on a weekly chart and probability to the upside on a daily chart. So again, it's giving us a probability there to look to go long. So if we look at individual stocks that make up this index, ideally we would like them to line up with that as well. If we come back to the daily chart here on the left-hand side, what we're also interested in, and this might be a little bit small, so I'll read it out to you guys. If you're on a bigger screen, you might be able to see this. We've got these three little numbers there at the end of our auto climate analysis. So what the first number shows us is how long this market usually goes up for in terms of number of candles. The second number shows us, I don't know what's happening with my arrows here. Second number shows us how long the market usually comes down for in terms of number of candles. And then the last number, shows us how many candles the market has been going in its current direction. So considering we're in an upwards climate at the moment, this is telling us that the market has been going up. This is its third candle to the upside. Now, how are these numbers useful? Comparing how long we've been going up already versus how long it normally goes up gives us a little bit more probability as to whether we can expect it to keep moving in a particular direction or not. So if we say here, let's take these arrows away, that usually the market would go up for 9.11 candles. So I'm going to round that up to 10. You can't have a fraction of a candle. So 10 candles it would usually go up for. And we're on candle number 3. And that's telling us that the S&P as a whole has more probability that it continues to go up at least for another 6-7 days or so. Now, again, none of this is definite because it's based on averages and probabilities, and of course things fall outside of averages or outside of probabilities, but it's just putting as much odds as we can in our favor. If usually the market goes up for a little while and we haven't been going up that long, great, we know we have more probability for it to continue to the upside. So hopefully that makes sense in terms of those numbers for auto climate. Let me know, by the way, if you've never seen auto climate before and you have no idea what I'm talking about, let me know. Or again, of course, you might be somebody that uses it all the time, in which case you already know this, but hopefully it's a good review. Now, the auto climate is something that we're going to use when we look at individual stocks to figure out whether or not it's going to be a good idea to go long or short. So looking at it in the general markets gives us an idea that we expect the general index to be going up again, for at least for the next few days. So ideally what we're then going to do is look for individual stocks that have probability to the upside. You can do that by just scanning through stocks and looking through maybe a watch list that you have, or you might have, I don't know, particular favorites that you look at. I like to use scanners. I like to remove bias as much as possible and just trade where the probabilities are. So you'll see here, we have this scan that's highlighted. So what this scan is saying, so it's DIR, which is directional, and then it's got D in the brackets, which means daily. Directional daily upside. There's an arrow to the upside. So what this scanner is doing here, and I've just clicked it and I just clicked run. That's all I need to do. Let us know, by the way, you can email us to get these scanners if you don't have them already. We can send them to you. So once you do that and you click run, on this window, it will just populate with all of the stocks that have probability to the upside. Now, that's not to say these are all good stocks to go and buy. We still need to go and do an element of analysis here, but it's just showing us, and of all of the thousands of stocks we could look at, these are the ones that have good probability to the upside. So rather than go through and look at all kinds of different ones, I would normally just click on the top one. As soon as I click that, that's going to load there on the chart. Let's do it as soon as possible. There we go. I might just load a little bit less data here so that it loads a bit quicker. Oh, it's loaded. There we go. Okay. So now that we're looking at this this market, we know that the general market has probability to the upside, and we know that this market has probability to the upside. So that's one thing that already is lining up. Then we're going to come over to our auto climate here on the left for this particular stock and figure out whether or not it has the right probabilities for us to continue with this. Again, at any point, let me know where you're at. Let me know if you have questions, or if I'm not making sense or you need me to repeat something, just let me know. So the good thing with this stock is that we can see that we have a thick blue dot, confirmed upwards climate, probability to the upside. That's what this auto climate app is telling us. However, usually the market, this particular stock, would usually go up for 4.15 candles. So round that up, 5 candles on a daily chart, and we're on candle number 12, which means for this particular stock, we have gone past what is twice as, gone further than twice as much as to what it would usually do, meaning we have more probabilities that it changes direction than it continuing in that direction. So for that reason, I'm going to stop at this point and not move forward and analyze this stock, because we've already seen that we don't have the probability for it to continue to the upside as much as we would like it to be. Again, that's me. It might be that somebody says, I don't care about the sustainability. I just want to go long if it's blue and go short if it's red. That's fine. That's your choice. I'm trying to put as many probabilities as I can in my favor, and I'm going to be stricter on that and say we'll move on from this stock. So I'll just click on the next one. And we can just go through this process until we find one that is a decent enough probability, and then we'll go through to the next element of the process. Okay, so this one is loading again, but looks like we've got this. So this is Xerox now that we're looking at. By the way, just to say, we run the scans on a daily chart. So essentially what this means is we have the auto climate on the daily chart, meaning where we're going to place our trades, if everything lines up with the methodology, is going to be on a smaller time frame chart, which in this case is the 55-minute chart. Now, if you've never seen our sessions before, you might think that's a really random number. Why would you pick 55 and not 60 or 30 or something like that? There is a reason for it. It's usually because we have slight better edge on these kind of off time frames. They kind of sync with the Fibonacci numbers. But if, let's say, you're using a platform where you can't see the 55-minute chart, the 60-minute would work just fine as well. Again, we're just trying to add more probabilities, hence why we're on this, what might seem a bit random, but slight edge time frame. But like I said, 60-minute would work fine as well. So let's look at our daily chart first, because the first question we should always be answering is, should I be long or short or not trade at all? We saw in that prior example that the answer that the auto climate gave me is that I shouldn't trade at all, because I was well past what the probabilities would suggest. So we're using the colors of the dots, the thickness of the dots, and those numbers that's coming from loads of different data points that AutoClimate is analyzing and then just giving us to make it a really easy decision. Do I trade? Do I not? If I do, am I long or short? So in this example, we've got a thick blue dot again. That's what we expect. Probability to the upside here. If we have probability to the upside, that usually means we're obviously looking to go long, but we need to look at different factors. So in this one, Usually this particular stock, usually Xerox, on a daily chart would go up by, just going to round this up, 7 candles in a row. And we're on candle number 3. So brilliant. We have probabilities of a continuous move to the upside, at least for another few days. So far with the AutoClimate, we have permission to be going long. We have permission to look at the next stage of the process. Now, just because we have probability to go long or probability to the upside doesn't mean we should just go and buy right now, whatever the price is. If we do that, then it's really hard to manage risk properly because you're kind of buying in the middle of nowhere because it happens to be the price that you're looking at it right now. It makes it hard for us to figure out where we put our stops. It means that we might take less out of the market than what we could, and it lowers our probability. So yes, we want to go long, but we don't just want to go long anywhere. We want to go long at a decent place where we can see that we have higher probabilities of lower risk trade, greater profit potential, and again, higher probabilities of it working at all. So we then layer in different things. We want to be taking our UFOs, these green UFOs here. These areas are highlighting for us where we see decent buying opportunities. And again, it's just software, it's technology that's analyzing market data for us and coming back and saying, these are where we have higher probabilities. Now, if it's a sell order, if we were looking to sell, we'd be looking at the green ones. The red ones. But as we're looking to buy, we're looking at the green ones. So these ones here. Now, saying this, we have 2 options just on this chart. And if I was to squidge it, then we've got even more green UFOs. Are we going to trade all of them? That might be an insufficient use of capital or insufficient use of leverage, or however we're going about this trade. So how do we know which one to pick? That's when we layer in another element. Now, this other element is something that loads of people use. We use our 9-period EMA. Now, the 9 EMA is something that's very, very common, but we're applying it because we are trying to add that extra layer of probabilities. So if loads of people are using the 9 EMA to help them figure out whether they should buy or sell, essentially, if the price is above the EMA and comes down into it, it's kind of hard to show you on there, but let's just randomly draw an EMA like this. In theory, if the price comes down and hits the EMA line, we expect it to go up. If price was below the EMA and came back up, hit the EMA, we would expect it to go down. That's based on, again, what people all over the world, including hedge fund managers, are doing. It doesn't always work that way, but it's something that a lot of people are doing. So they're potentially adding their buy orders in when the EMA is hit. We also have UFOs to help us have that extra probability, and we know that the climate's in our favor. And we know that we have probability of a continuous move to the upside. So many different factors here that are all going in our favor. So if we have this all line up, then we have a decent trade. So let's have a look. So the 9 EMA value here is 22.99. So ideally, we want to have our UFO enveloping that number. So we're using the 9 EMA on the daily chart because it's a bigger chart, slightly higher probabilities there. So we want that EMA number on the daily chart to line up with a UFO on the 55-minute chart. Doesn't always happen that way, but let's take a quick look. So this, I'm just going to move this guy. This UFO here, it's hard to see that. I'm just going to, can't remember how to change that. I think it's settings, preferences, style, nope, display. Let me change that. Now we can see it. There we go. So if I just hold that, then we can see that the beginning price of this, the top price, is 22.85. Now our EMA value was 22.99. So that means the EMA value is just above our UFO, meaning it doesn't line up. I know that can seem very strict because it is very, very close there. In fact, it looks like it's about whatever the price is right now. But we have rules for a reason. It has to be enveloped. If we start breaking the rules because it's a couple of cents different, where do you keep drawing that line? How many cents does it have to go outside of your rules before you stop it? In which case, that should have been your rule anyway. So I know it's strict, but this doesn't quite line up exactly as we want it to be. So we move on. Is this making sense to everybody so far in terms of why we eliminate these opportunities, why we take these opportunities? Also, by the way, let me know if you do have a list of favorites that you want to look at. Let me know if there's a particular stock or ETF that you want to have a look at, and we can have a look at that, no problem. In the meantime, I'm going to open up the next symbol. So the next stop here, there we go, I didn't quite sync. There we go, I'm going to do this. Okay, so Yeti Holdings, brilliant. So it's just loading data at the moment, but we'll just, oh, there you go, it's all synced. So we'll just do the same thing that we did before. And again, very quickly, we can let the AutoClimate tell us whether or not we should be doing anything further. Very quickly, we can see here that although we have probability to the upside with the climate, usually the market goes up for 7 candles, and we've been going up for 27 candles. So more than 3 times what normally happens, which means less probability of it continuing. If you pull an elastic band and you just keep pulling, the more you pull it, the more likely it is to contract on itself or break, as opposed to allowing you to keep pulling it. And that's essentially the same theory here. The longer something goes past what is usual, the more likely it is to come back to that average and come back to that normal. So again, the AutoClimate has helped us make this decision very quickly. This is not a trade that we want to continue looking at, or a market we want to continue looking at. So let's look at the next one. So York Water. Again, some of these stocks I haven't even heard of. Very quickly here, I'm not sure where that would have been in that section, because it looks like we have an unconfirmed climate here. Again, AutoClimate answering the question for us. Should we be long or short or do nothing? We have a thin red dot, which means no, we don't want to be looking at anything. It's red for a start and it's thin, so we don't want to be looking at that. Just seen from there, so YOLO ETF. I didn't know there was a YOLO ETF, but let's type that in. I like it. I like the meaning behind it as well. Brilliant. So we can have a look at this and we can see AutoClimate on the left-hand side. And what's beautiful about this, I think, is that whatever we look at, whatever comes up on the scan, whatever is in your list of favorites, whichever suggestions people have, it's the same process every time. Is it a trade that we want to look at or not, based on probabilities and technology every time? So it's a very objective way of looking at things. So it means that we're less likely to have bias, we're less likely to be subjective, which means that we're less likely to be inconsistent with the way that we do things. Okay, so this is a thick blue dot, confirmed upwards climate, probability to the upside, so that's good. Usually, market goes up for 6 candles. Again, I'm just rounding up that number. And we're on candle number 3, so probability of a continuous move up, so that's great. So this has given us permission from the AutoClimate perspective to then move forward with the methodology. So essentially what we want is a UFO on this right-hand side, on this 55-minute chart, that coincides with the EMA value on this chart. By the looks of it, we're going to miss it by 1 cent. Let's just have a quick look. So the EMA value, it's changed. Okay, EMA value there is 16.65, which is the bottom number of this UFO. So let's just double check those numbers. So 16.65 here is the lowest number on that UFO, and 16.65 is the EMA value, which means they are coinciding at the moment. The EMA value is literally just within this UFO, but this is where we need to be very, very strict. And again, this may be sort of personal preference here. You might have rules that say, you know, if you have a 10-cent wiggle room and the EMA coincides with that, then that's fine. You might say it's got to be exactly within that UFO. Again, as long as your rules are there and you stick to them every time, that's the most important thing. Now, for me, I'm going to be strict with this and say, at the moment, this EMA value, because an EMA is an exponential moving average. So the clue is in the word moving. It moves with price. As price goes up, the average goes up. As price goes down, the average comes down. So essentially, this EMA value is reflective of where price is at right now. As price moves up or down, that EMA value will move as well. So as price moves down, if we were to get into this trade and use this UFO here as a trade, as price moves down a few cents, it's likely that the EMA value might move down a couple of cents, which means it might then be 16.61, 16.58, 16.63. and that will definitely not coincide with our UFO. I know it's very strict because it is a couple of cents, and at the moment it lines up, but I'm sort of anticipating where we think the EMA will be once price moves. Now, if price moves really quickly, the EMA doesn't always have time to catch up, and you might be able to get into that trade. With things like this, I would say set an alert really, really close to where the entry would be. Perhaps if you're trading on TradeStation, you could stage an order where you essentially go through the process of putting an order on, but instead of pressing place order, press stage order and put an alert on, so that if it comes to a couple of cents above that UFO, it will trigger an alert, and then you can quickly check where the EMA is at, and it's either within the UFO and therefore you press place order on the order that you staged, or it's not within the UFO, in which case you leave it alone. So you can use alerts there to your benefit. So again, really, really close. It's a shame that one didn't quite work out, but hopefully you understand why I'm being strict with that. Again, ultimately up to you. If you want to be more lax on those rules, that's up to you, but be consistent with it. That's the most important thing. So thanks for that suggestion. Like I said, really, really close. I'll continue to just click through. Again, any other suggestions you guys have, any other things you want to look at, just let me know, type it in the chat box and we can have a look and go through it. So here we go. So Z, I would say Z, you in the States would say Z, ZBH, Zimmer Biometric, is that? Something like that. So again, a lot of these stocks or companies don't even need to have heard of them, which I think is really great because it again removes any bias. I know there are lots of people that when they trade stocks want to know the background of the companies, and I'm sure there's validity in that as well. You're going to get some sort of decent fundamental information which could help for maybe long-term investment. For me, I try and not know as much as possible about what I trade. So when I trade Forex, for example, I don't trade the pound because I live in the pound. I pay in the pound. I get paid in the pound. So for me, I have a little bit of bias because I care what happens to the pound. If I travel or business transactions or whatever, it's something that affects me. That's not to say I'm going to deliberately think, oh, go long the pound because I want it to go up. But I know that that might be in the back of my head somewhere. So I don't trade it. I don't want to know. So same thing when it comes to stocks. I ideally would be putting trades on things that I've never heard of before, because then it is as objective as it can be. It's purely based on data, and there's no bias or no thought process that can be subjective or wrong. It's just simply data. Not to say you couldn't lay in fundamentals as well, but that's the way I think about it. So looking at this one, ZBH or ZBH. So once again, thick blue dot, probability to the upside. Normally goes up for 6 candles. We're on candle number 3. So great. Probability that it continues up. The EMA number here, just having a quick look. Looks like we won't have an opportunity here. That's 147.99, which is, I guess, here. So no UFOs in this area. That's where the EMA is. So no trade to be taken. And again, the good thing with this kind of thing is that we can go through it and figure out what trades not to take, which I know sounds a little bit sort of backwards because we want to be placing trades, but better to not place a trade that has less probability than place it for the sake of placing it and end up more likely losing money. We don't want to be placing trades simply to place them and then be more likely to lose. It's a waste of our capital and it's a waste of our time. Better to maybe spend an hour, look through different things and realize that none of the opportunities that you've got in front of you are good enough and save your money. Although it can seem like it's a waste of time, better to have made or lost nothing than have spent that time and then lost money. Again, if that makes sense. So looking at how about the percentage number? What do you mean the percentage number there? If you can just expand what you mean by that. Do you mean percentage number, this one here, this blue one? If that's what you mean, you could use that as an added odds enhancer. If you mean something else, let me know. But I'll continue looking at this, and then whilst you answer that question, I'll come back to that. Okay, so what we're on now, ZG or ZG, Zillow Group. So here we have the auto climate showing us that usually markets go up for 8, or this market goes up for 8 candles, and we're on candle number 9. So just over what normally happens. Again, depends how strict you want to be here. Some people will say as long as it is within 100% more, so let's say it normally goes up for 8 candles, As long as it's not 16 or above, they'll still take that trade. Some people are stricter and say, nope, if it's anything over 8, I'm not taking it. You could have different rules where you say if it's between 8 and 16, I just use half of my risk or something like that. I tend to be stricter and say, no, if it's not within those numbers, then I'm not taking it. I've just seen there on the chat box. Okay, so we're referring to this percentage number. So this percentage number applies to the UFOs only on TradeStation. So you won't, if you have UFOs on TradingView, you won't necessarily see these numbers. What these numbers refer to is the percentage of the time that price moves between UFOs. So essentially, it's telling you the probability rate of the UFOs. So one extra thing you could do, I'm just going to put it down, see if we have any red UFOs ahead of us. We don't. So I'm just going to draw one in. So let's say we had a red UFO here. Essentially, what this number is telling us is how many times does price hit one UFO and then hit another one. So go from one to the other. So it's tracking the rate at which the UFOs work, and it's defining how well they work by whether or not they hit the opposing UFO. So it could be that there are a bunch of trades in that might move 1 to 1 or 2 to 1 or whatever, that are not counted in this probability rating because they didn't hit the opposing UFO. It could be that the opposing UFOs are really close. It could be that they're really far away. So it's not necessarily that the higher that number, the more money you make. That's not necessarily true, but it does give you a general idea as to how well the UFOs are working, how often they price will move, hit a UFO, and move to another one. Now, you could say, for example, as part of your trade plan, that you need this number to be more than 40% or more than 50% or more than 60%. Of course, the more strict you are, the more, the better you need that number to be, the less opportunities you have, the more different layers that you have to go through before you place a trade, the harder it is to find a good opportunity to place a trade. But the good thing with that is, by default, you're going to have higher probability, more chance of it working. So again, you're going to balance these things out. You might be somebody that says, I want to have as many opportunities as possible, place as many trades as possible. As long as I make money, I don't care if the probabilities aren't as high as they could be. You might be somebody else that says, I'd rather be right more often and place less trades, even if that means I don't have a trade on for 2-3 weeks. As long as my trades have a higher probability of working. That's a personal thing. But you could use that and put that in. Just in from there, using that last example, if a 9 EMA properly equals the lowest value of a UFO, do you take this trade or ignore it? Where would you put the stop? There's no room for error. Yeah, so on that example that we were just looking at, Joe, where, and I know this isn't the right chart, but let's say the EMA value was right here, right at the bottom of that UFO. I would say, in order to be strict and keep to your rules, just put an alert on. So stage the order and put an alert on, say here, so that if price comes down to come into that UFO, you can check when it's really, really close, is the EMA still at that bottom number? The reason I eliminated that prior opportunity was because the EMA number was literally on that bottom line, which means if price moves down to get into that UFO, the EMA number is also likely to move down. If the EMA number then moves down, it's no longer within the UFO. So I was anticipating that the two things wouldn't line up, even though they lined up right then as I was looking at it, because the EMA will move as price moves. Again, that's a potentially stricter way of being. But if you want to make sure that you're definitely sticking to it and that the trades that you enter or the trades that trigger definitely do have everything lining up the way it needs to be and they're not a couple of cents off, then yeah, you would put an alert on. You can have your stop wherever you want to put your stop. So let's say if you have a 10-cent rule, fine, you can do that. Some people take it exactly as it is. No wiggle room at all on their stop. That's a personal thing. Again, it's more important that you are strict with whatever you decide. So if you say, I'm going to give myself a 10-cent wiggle room because that's what makes you feel more comfortable, you may then say the EMA can fall anywhere between my entry and stop because you've already given yourself wiggle room. But be strict on that and always do it that way. Don't have it. Sometimes it's got to be within the UFO itself, and sometimes it's got to be within my entry and stop. It's got to always be one thing. The stricter way to do it is that it always has to be within the UFO itself, no matter where you put the stop, because that's the most objective way to do it. And therefore, if it's at the bottom of the UFO that you're about to go long at, anticipate where that EMA might be by the time you hit your entry. I think it was YOLO. Let's look at the chart itself and then we can see. There we go. So here, yeah, it was this one. Well done. So this one, 1665 is the EMA and 1665 is the bottom of this UFO. So if we were to get into this trade and put this trade on, wherever we put the stop, wherever we put the entry, but we're using this UFO. As price comes down, that number is likely to be 16.64, 16.63, 16.61. So it's likely to then become a number that is outside of this UFO entirely. It might be down here. And therefore it doesn't line up. So it's anticipating where the EMA is likely to go. If the EMA was, let's say, 1675, it was at the top or somewhere in the middle, you have less probability that that small move down in price would move the EMA outside of your UFO. So it's an element of anticipation that I guess comes with the more you do it, the more you kind of get to know how EMAs move. But again, having the alert will help, so that once it's a couple of cents away and you've got an order staged ready to go if you need it, once it's a couple of cents away, you can double check where the EMA is. Does that make sense? Let me know if it doesn't. But essentially, the summary is it's anticipating where it will be. So if it's on the bottom of the UFO and price has to move down to get into your UFO, then it's likely to move outside of your UFO. Hopefully that makes sense. Let me know. So I think we looked at ZG then was the next one we looked at. Let's have a quick look. Okay, so I'm just looking quickly here. So again, this one depends on how strict you want to be. Let's say in this particular example, we are only one candle over what normally happens. And let's say you are happy to still put a trade on at a reduced risk as long as it's not over twice as much. So we'll look into that. Now, we then look at the EMA, and again, very quickly realize no trade to be taken. The EMA is 133, and that's around about here. No UFOs, no trade. Easy done. So we'll click on the next one. So ZS or ZS scalar. Is that how you say that? There we go. So this one, again, very quick, easy, no, because we see here, usually market goes up for 7 candles. This one's been going up for 20. So that is way more than twice as much. I don't think we can't really justify that and say, oh, we'll just put a little bit less risk on because it's maybe a couple of candles over. It's quite a lot over. It's more than twice the amount. So just no probabilities there. Nothing to be done. Let's look at this last one. ZUMZ or ZUMZ, zoomies. There we go. So we can have a look at this one. Potentially, I don't think we will, but let's have a quick look. So here, normally market goes up for 6 candles. We're on candle number 4. Probability it keeps moving up a little bit. We have an EMA value of 37.73, which is, oh no, that's about here. So no UFOs in that area. Now, this is the cool thing, is that I know sometimes it can be frustrating because we say, oh, I haven't put any trades on. We've just spent 38 minutes and we haven't found any trades. But isn't that better to have easily eliminated 10 different opportunities rather than put them on and then lose money? To me, I'd rather have probabilities on my side and have a trade that is likely to do well, at least maybe break even, than just place a trade because I want to place a trade. So we can use the technology to make this really quick. We've gone through 10 or so, and we've looked at a couple outside of that. So yeah, 10 or so different opportunities in the space of 30, 40 minutes, and easily been able to say no, and this is why. Of course, I've also been explaining it. So if you do this yourself, you might get through even more opportunities quicker than that. Now, we could look at that directional down, which tells us that the good opportunities to go short. Now, one of the things I don't like about this way of doing things is that, yes, we're looking at trades that still have probability to the downside, but it doesn't fit with the general market movement, which means we lack a little bit of probability there when it comes to correlation. But it depends on what these stocks are. If they're not within the S&P, or they're not within the Nasdaq, or they're not within the indexes, then less issue if it doesn't line up. Let's say they're ETFs that track gold or currency or something like that. They still trade as a stock because they're an ETF, but they represent something that would be opposite of what the market does. So we'll have a look through these and see. So we have Yelp. I assume Yelp is within the S&P, but let's have a quick look and just check out the opportunity. Again, the auto climate itself is telling us no trade. Usually this market goes down for 5 candles. We're on candle number 9. So, nearly twice as much. There's no point really taking a trade if we don't have probabilities of it continuing in that direction. Click on the next one. Yext. Never heard of that either. So this one here, that's an unconfirmed climate anyway now, so we don't want to look at that one. Again, just showing you here, this one is a thin dot. If it's a thin dot on AutoClimate, that is AutoClimate's way of literally telling us, don't even bother. You don't have probabilities one side or the other. Very, very quick way of doing things. Again, here, we can look at this. So YY is joy, it looks like, with a double Y there. Usually, this market goes down for 7 candles. And we're on candle number 14. So again, we've gone way past what is likely to be a continuous move down. If we click on this one looks very bitty anyway. It's what I mean by bitty is you see these gaps everywhere. It's not a very good looking chart at all. With this one, potentially we still have probabilities to take it to the downside. I really don't like this chart. It doesn't look very good. I'm just looking at that UFO. No. Okay, yeah, this is the... If you guys can see, I'm not sure if you can see very well. It might be very small. There are gaps all over this, which means that if price gapped, went somewhere, and then gapped again, we've got like a 1 cent band or a 2 cent band. It's not very good place to be taking our trades. Plus, we can see here the probability rate of these, 21%. 22% if you want to round it up. So again, not really somewhere that we want to be putting our money if we don't have decent probabilities. So if you guys have any other suggestions in terms of different markets we can look at, we've got a few minutes left. I'll just put Facebook on for now, just have a quick look. Obviously that's a big one that most of us know. Interestingly, this is moving to the downside, counter to the indexes it would be a part of. But let me know if you have any other suggestions that we can look at. I'm just looking there from Joe. So to be 100% clear on this, your explanation assumed the EMA drops on YOLO. What if it doesn't and equals the lowest portion? So if it doesn't, then great. It's still within your UFO. Take the trade. So if we just go back to YOLO, so I can show you it a little bit more visually. So let's say EMA right now is here. And price does come down and enter this UFO. And the EMA is still here, great, take the trade. So that's why you can put your alert on, really, really close to your entry, have your staged order ready to go so that you can double check, is that EMA still lining up? If it's still lining up, great, take the trade. As long as that number is within that UFO, it does line up, but only just. But it still lines up. So if the EMA is still at that line by the time price came into your entry, great, decent trade, put it on. You've got your probabilities. What I'm assuming is that because price has to come down to get into our UFO, the EMA only has to move down by 1 cent, and price is what? 30 cents, 25 cents away from entry. So if price moves 20 cents down, 25 cents down, it's likely that the EMA would at least move 1 cent down. And if it does move 1 cent down, it now no longer lines up, even though it's just out. So hopefully that makes sense. If it still lines up when it comes in, take it. If it doesn't line up when it comes in, don't take it. So hopefully that makes sense. Let me know if it doesn't. I'm happy to explain that again. And VRT is a suggestion there from... I'm reading that as True Wild. That's how I'm going to say that. True Wild. Let me know if I've said that wrong. So VRT, let's have a quick look here. Brilliant with this one in terms of our auto climate. We can see thick blue dot, probability to the upside, so that's great. Usually market goes up for 6.60 candles, so 7 candles, let's round that up. We're on candle number 1, so probability that it keeps going up at least for another 5-6 candles, so that's great. Probabilities lining up there. Again, it will seem to align with the general market as well, which helps us out. Then we just need to look at our EMA. Looking at it quickly, I'm not sure it's going to line up, but we will go do that. So see, we have here our EMA 19.13 or 19.14. It was just before we froze that. 19.13 would be here-ish. So not quite lining up with this UFO. If we just click and hold on the outside of this UFO, we'll see the very top. There we go. See that begin price? I know it's overlapping a little bit, but the beginning price there is 19.01. So the top of the UFO is 19.01. The EMA is 19.13. So doesn't line up. No trade. Now, again, like we were talking about with anticipating the EMA, it may be that if price maybe goes sideways for a little bit and then comes down, perhaps this EMA number will come down as well and line up nicely. So on those where you think, they're quite close together, but not quite lining up, maybe you can just set alerts on it so that as price does get closer to what could be an entry, you've got, less margin of error, less margin of things moving, because you have, if the EMA is lining up and price is 2 cents away from your entry, it's very likely that it will definitely line up when you have your entry. If the EMA is lining up but your price is miles away from your entry, price has to move to get to your entry, which means the EMA moves. So there's an element of anticipation. Hopefully I didn't make that more complicated than it needs to be. It's if it lines up, great, put the trade on. Double check before the trade gets entered if you're not sure about things. So put an alert on, double check that it's still lining up, even as price has moved, and then you can just send your order. So hopefully, Joe, I didn't confuse you. If you do have questions again, so whether it's that question or any other question, if you go to tradewithufos.com/Becky and ask this question here in this public space, all you need to do to access this bit is set up a free membership. So you just go to tradewithufos.com/Becky, fill in that information. Once you've got a free membership and you ask it in this public space, if you have that question, probably somebody else does too. So they'll be able to see the answer. So if you're still unsure on anything that I've covered today, or you think about it afterwards, or you're watching the recording, you can come to this page, post your question, and then other people can see the question and the answers. So that might be able to help out everybody as well. So that brings us to basically the end of the session. Hopefully it was helpful. I hope I didn't confuse you guys. Do let me know. Okay, I'm just seeing there a quick question there from Joe before we finish. So where does the stop go? The answer is dependent on you in terms of if you just said, this is my entry, this is my stop, that's valid. That's okay. If you said, I'm going to give it a little bit of wiggle room and give it another few cents, you can do that too. So I know sometimes it's annoying when the answer is it depends on you, because it means you have to kind of make your own decision. But essentially what should help you make that decision is if you have your stop exactly on the bottom of that UFO, you have a smaller risk between entry and stop. Let me just try to do that exactly. Smaller risk between entry and stop, because that's a smaller distance in price, which means you're more likely to hit targets that are one to one away. Because if this is a certain amount and your target is the same amount, then the smaller it is, the more likely it is to happen. If you were to add a bunch of wiggle room, say down here, your safety target, your first target is going to be all the way up here now, not wherever it would have been, maybe there. So the wider it is between your entry and stop, the less likely you are to hit your targets. But the closer your stop, the more likely you are to be stopped out from something that could have gone your way. So it depends on your personality and whether or not you're okay to see price do that and go, it's fine, that happens, and maybe your target was here, or whether or not you would rather, if that was going to happen, see that and price have to go further to hit your target. So that's how you would be weighing that up. So hopefully that makes sense as to where you do that. I personally, if this helps you, just do a 10 cents. So whatever it is, if I'm going long, I put 10 cents below the UFO is my stop. If I'm going short, then it's 10 cents above the UFO. It's just a nice, easy, flat number. That is just my rule, 10 cents. So if that helps you, then you can do it 10 cents below. But in terms of the EMA lining up, the stricter way to do it is make sure that it lines up with the UFO itself when you enter. So again, I'm just checking the chat box. I know there's a little bit of a delay there, but hopefully that makes sense. If not, you can email me if you want to. If you'd rather it not be in a public forum, you can just email me, becky@traddictiv.com, or you can ask your question here in this question box once you have a free membership, and other people can see the answer. So if they're confused as well, then hopefully the answer will be there for everybody to see. I believe I'll be back on in a couple of weeks. I know it's Christmas in between, so I'm not sure exactly when we'll be back, but we can check the calendar. You'll get links through to it. Hope you guys have a wonderful Christmas. Hope you guys have a great time in the markets. Obviously today's Friday, so it'll be next week. Hope next week goes well for you. Any questions, let me know. I've just seen that question from you there, Joe. Just for the session, if you can either email me that or put it on the thing, and I will answer that for you. Hold on, just going to read it. If the EMA lines up with the bottom, no room for a stop. Okay, so the EMA is to do with the UFO, not necessarily to do with where your stop is, unless you choose that as part of your plan. So to be really, really, really clear, if you want to be really, really strict on it, if the EMA lines up with the UFO, take it. If you add wiggle room to your stop and the EMA is outside of the UFO but before your stop, don't take it because it doesn't line up with the UFO. That's the strictest way to do that. You can, of course, mold that more towards you if you want to change the rule on that and say it's got to fit between your entry and stop. Fine. Be consistent with whatever rule you do. But the stricter one is it's got to line up with the UFO itself wherever you put your stop. So hopefully that's clearer. But there we go. Okay, right. I think I know there's a delay, so I don't know whether or not I'm just talking to myself here. But like I said, let me know if you have questions further to this. You can email me, put it on here. Have a great Christmas. Have a great one next week. I'll be back probably in a couple of weeks' time. So have good, happy holidays. Keep safe, keep healthy, and I'll see you next time. Take care, guys. Bye-bye.